Okay, so trade review for 9 September, and this is early pre-market this morning, um, starting right at 5 o'clock. Been making that a habit to get up early enough to prepare and meet the market at, I said 5, that's local, but to meet the market at 7 a.m. Eastern time. So today I had taken 4 trades. Really, the last 2 were a split, and I'll get into that when I talk about that one. So, the first trade that I took this morning was right at 7 a.m., 7:03 at 3 a.m. actually on DSY. Um, this one was on my watch list and due to volume. And so the MACD looked good. The EMAs looked pretty good. It was above the 9 and the 20 here, basically right out of the gate. So this is right at 7 here. And so prices are going up, and then it right here, you can see where price was spiking. So I jumped in there. It probably wasn't the best move to jump in right there because there was like a pullback here. And then, like I discussed in the previous video, I jumped out. Now, this one was a green trade for me, but I could have stayed in if I was looking at both the MACD and the EMA. I could have stayed in here and then really made a little bit more profit. But I did hit green trade, and actually, now that I look at that, so that would have been I got out at $7.80, and the high right here was 8.80. So I could have made another dollar on that, and so that's a lesson learned for me, which is something that I'm continuing to have to work on, is holding my trades that are looking good and the price is increasing. But I'm not. I tend to just go to my target and then pull out. And you'll see on the last trade that I made for the day that I've been kind of trying a new um, risk management um, type of trade, and we'll talk about that in a second. So that was DSY. My first trade of the day was green, and then it was kind of slow the rest of the morning. Man, I was looking at my watch lists and checking all my screeners. And then, so after the open, nothing happened. But YOUL had come up, and YOUL looked okay, but it was, I think I mentioned this before, YOUL is a Chinese stock, YOUL. And I tend to not trust Chinese stocks. You can see that it spiked earlier this morning. This is at like 7:15 here on the 5-minute chart on that upper right there. Um, it had spiked, and so this was just after 5 o'clock. I didn't, or just after 7 o'clock, and I didn't take any moves there. I don't remember. I don't think it was on my watch list that early. It might have been the volume, but I don't know why it wasn't on my watch list. But so somewhere in this couple hours here between that early morning pre-market spike and the after the market open, it was on my watch list. And so right here, okay, so we can see the open right here on the 1-minute chart. We saw the price spike and then pull back, and then it spiked and pulled back and spiked again. And so I was anticipating another price increase right here. And so I jumped in at 377 right here on this candle, and the price tanked. So looking at this, I jumped in. So the MACD was terrible. It was actually positive, but it was converging right there, and it actually went negative right when I took the trade. So I wasn't paying attention, and EMA is not looking good. So below VWAP, it was just not a good. I was basically I took the trade strictly on what I was seeing on the chart and not what any of the indicators were showing me. So I do need to pay attention to that. Obviously this MACD is terrible. This is not good at all. And I was just looking at price action. So not a good decision on my part. And that was a red trade. And then basically the rest of the day, that stock kind of tanked. Let's see. And then my third trade was soon after that. It was MMA. Now I had seen MMA pop up because of the news earlier in the morning. And so right here, there was some news about Don Trump Jr. joining their marketing team or promo team or something. So based on that news, the price spiked. I was not watching it that yet because of I'm pretty sure it was because of the volume, so it wasn't on my watch list yet. Um, and so here, there's the open. Right after the open, so price kind of dropped, and then we had a couple opportunities to jump in here. I think this was when I was taking that YOUL trade was right in here. Um, but after I took that bad trade, I kind of disregarded YOUL after that. I should have disregarded it from the beginning, but and then this came up. I had noticed that the price was looking good here, and so I jumped in towards the end of this, and I jumped in at 269. And what I did is I had been studying some risk management strategy where basically if you get in a position, say 100 stocks, and once you make your profit, then you pull some of your profit out, 25% or 50% or what have you. And I pulled 25% out because it was still looking good. Um, and after I did that, the price didn't continue. Even on this neck candle, it didn't continue. So I actually pulled the rest of it. I pulled the rest of the stock out or the rest of my money out right at the same time, probably like 30 seconds later. Um, but that's the first time I ever tried to do that. Normally, like you would, say you buy something at $5 and you hit your target at 550. You pull half of your stock position out, and then it continues up. Say it continues up to $7, and then you pull the rest of your position out. So that way, when you pull your first half of your position out, you secure those profits so you don't lose all of it if the price tanks. So I just am starting to learn that, so you can secure your position and your profits. And so that's just something new that I'm kind of adding. And I'm still working on it. Obviously that was just the first time that I had done that. Um, so that was the 3/4 trades that I took for the day. Um, I was that was 3 green trades and 1 red trade, and I forgot what my P&L is, but basically I was like down, I think like 0.3% or something on the day. So not the best day, but some good lessons learned there for me. Um, and I do want to also bring something up about some trading psychology, I guess, if you will. Now, I'm just a novice at this, and I, drive quite a bit. So I listen to a lot of audiobooks or, YouTube podcasts while I'm driving or whatever. And so the little bit that I have learned or know, I try to teach to myself. And part of the way that I can do that is to talk about it. And I learned this as an electrician. I would tell the younger guys, new electricians, apprentices, just because they were an apprentice doesn't mean that they can't learn or can't teach somebody else. An apprentice that's like a second year guy could teach a first year guy, stuff about safety or, basics or tools or, things like that. So, they might not know everything. They shouldn't think they know everything, but the little bit that they do know, it helps reinforce it in themselves if they teach it to others. And I know that some electricians and journeymen or master electricians don't think that apprentices should teach anybody, but I disagree with that. I think that you can that a younger guy can teach another younger guy who is newer the little bit that he does know, and it helps reinforce that information in both of them. But so anyway, um, something had come up today in one of the, I'll call it, chat rooms that I'm in, and like I'm bringing this up, like I don't really want to throw shade on anybody at all, but it's just a lesson learned for all of us, including me particularly, which is why I bring it up. And I'll probably read some of this verbatim and then kind of respond to it. So this one guy says that he's a day trader and he goes long or short. He said he studied for a year and he knows a good pattern when he sees it. Um, but he has performance anxiety to trust A quality setups and FOMO, so he trades C quality setups. Um, he says some other stuff that I didn't really understand. So he's trying to get some psychology tips because he feels bad when he misses good setups, and he gets FOMO. And so some people had kind of chimed in, some other people in the chat, and some good advice for him. Um, but for new traders, people that are in my position, I used to keep a watch list. My watch list had different. I used to have like 4 or 5 different watch lists in the morning. I had like a pre-market, and then like I had like A setup, then I had penny stocks, and then I had a B setup, and blah blah, all this other stuff. And so I have this watch list, and it has like maybe 5 stocks on each one. And I'm trying to watch all of them in the morning, and like you kind of get confused on which one is which, and you got to open different tabs, and it was just kind of a mess. And then I didn't have my system quite figured out yet, and so it was just kind of like chaos. And part of the problem was I was trying to look at too many different stocks instead of refining my watch lists, plural, down to one. Today, I prefer to look at 4 stocks. Sometimes I'll look at 6. If it's slow, I might have, 9 stocks that I'm looking at. And that's only if it's slow. Um, but the thing is if when you're looking at B or C, especially C quality setups, like you're kind of wasting your time, because even if you take a C trade, it's not going to be profitable. You're probably going to lose on it. It'll be a red trade. You're not going to learn anything. It's going to be luck, and it's more like gambling. Um, and so you want to ignore C trade setups. B trade. If you're good, I would say maybe you can look at B trades, but you're better off just slowing down and waiting for A quality setups. And, you know, 20 C quality setups um, is never even as close as good as one A quality setup. So it's not worth the trade off to take all these C quality setups. Now, if you're just like literally barely started trading, like when I first started paper trading, um, I think on paper you get like $1 million or something, monopoly money. And I was just taking trades. I think I took like 200 trades a day or something, because you're trying to figure out the UI and the keyboard and what you're seeing on the charts. And there's all kinds of stuff going on. And a lot of it you don't really know. You're just kind of playing with it, but you do want to, and a lot of those trades you would take are like C quality, B quality. Probably none were A quality. And I don't remember, because back then I wasn't doing any kind of trade review or, chart review or anything. I was just taking trades. Um, So taking C trades as any, no successful trader takes C trades, and no beginner should take C trades. So you're kind of wasting your time, and if you're using cash, you're basically wasting your money. Um, um, and so the other thing that guys like this new guy that was looking for advice should do is in the mornings I have an actual written journal. I actually journal a couple of different ways. So I have a traditional paper journal that I write down my thoughts, what I'm thinking, and what I'm feeling from pre-market open, which is 7 a.m. Eastern, through my trade, my whole trading period. So whether I trade within 30 minutes or I trade for 3 hours, um, all basically everything that I'm thinking and feeling, I write down. And and it's not just the stuff that makes me feel good. It's the stuff that is like dark or stuff that I don't want to admit or talk about or face, like my weaknesses. Like all that stuff has to be written down so that I can look at it and examine myself when I'm, looking, say like I'm looking at a trade and I make a bad decision. Well, in my journal, you know, what was I thinking about? Or, what was, am I, like for me, one of the things I need to work on is making decisions faster. As a person, that's something that I need to work on. And as a trader, that's something that I need to work on is making faster decisions. Um, and so, but those type of things, you can't see them if you don't have a journal, and you can't admit them to yourself. If you don't write it down, look at it and see it and be able to admit it to yourself. So having a journal and writing all that stuff down is one of the steps in being able to make yourself a better trader. Um, and then also just having a strategy should be a priority. If you have a strategy, um, looking for A quality setups should come naturally. Like you shouldn't, like no strategy should allow for C quality setups. So you're kind of guessing, I guess, if you're taking C quality setups, your strategy probably isn't nailed down yet. You're probably still kind of trying to figure it out, and that's probably fine. But if you're using real money, that's not the best decision. Um, but once you get your strategy figured out, or you think you have a strategy that seems to work, kind of start nailing it down and figure it out. Part of your strategy should include stock selection. It should include risk management. It should include an exit strategy. Um, so you don't have to self-destruct or lose money or waste money or be scared that you're taking an A trade because you might lose on the A trade or miss out on FOMO. Like, I do that still, and I still have a lot of things to learn. And, even much more successful traders um, deal with these things as well. So for me, slowing down, becoming a craftsman, you know, getting good at the one strategy that I have, studying the strategy as I look at the specific stock that I took a trade in with that strategy, my exit strategy, um, and becoming a sniper. Like, where would I have taken this trade better? Like on MMA here, I could have taken it down here at 9:43 a.m. and I could have held on to it. I could have sold some right here at 9:54. Could have held on to it, or I could have sold my whole position and bought again at 9:56 and then sold it up here. And when I used to do paper chart review, and I may do that. I'm just trying this video thing. Um, I would write all that out. This was a better place to take the trade, here. It's a better place to sell here, better to buy here. This was a good position to buy right here. Um, so being able to see all that stuff and, but you have to figure that out. You have to look at the decisions that you made. Were they good or bad? Where could those decisions have been better? And part of that is looking at doing chart review, and also it's looking at journaling. So anyway, that was just kind of some of my thoughts on taking C trades. If anyone's doing that, I would never recommend that. I don't know if there's anybody that recommends anybody taking a C trade. I've never heard any successful or professional trader suggest that you take C trades. Like it shouldn't even be a thing. Um, and one last thing is the first rule of trading is to protect your capital. That's not my rule. I forget the guy's name that I learned it from, but that is a good rule to go by. His first rule of trading is to protect your capital. So anyway, that's my thoughts for today, and thanks for watching.